Florida's housing market was the envy of America. Waves of newcomers, prices that seemed to climb without limits. Then hurricane season shattered the illusion. Insurers vanished, premiums tripled, and 1 in 5 homeowners were left unprotected. Buyers disappeared, inventory jumped more than 60%, and deals collapsed in places once branded paradise. The governor now faces a crisis that threatens not just property values, but the financial futures of hundreds of thousands. Why are families and investors leaving as fast as they arrived? And is this only the beginning? From July 2020 to July 2022, more than 622,000 people moved to Florida, with nearly 299,000 landing in Miami-Dade, Palm Beach, and Broward in a single year. The pitch was irresistible. No state income tax, cheaper homes than the Northeast or California, and poolside Decembers. It wasn't just retirees. IRS data shows adults 55 plus were only about 37% of the influx. The majority were younger families, remote workers, and investors. Tech employees set up home offices in Boca. Nurses and small business owners planted roots in Tampa. By 2022, investors made up nearly 30% of home sales, fueling bidding wars that locked out locals. A Brooklyn salary could suddenly buy a backyard in Sarasota, and offers poured in from buyers who'd never set foot in the state, sometimes competing with hedge funds buying whole blocks. Sellers set deadlines, inspections were waived, and the median price in key zips doubled in 30 months. Listing prices didn't just rise, they sprinted past every benchmark. A 3-bedroom in Coconut Grove that was $600,000 in 2019 closed at $1.2 million by late 2022. Palm Beach County's median crossed $600,000. In Naples, modest ranches fetched 7 figures. All cash offers crowded out financed buyers. In Coral Gables and Boca Raton, it was highest and best by Thursday at noon. Families seeking starter homes found themselves bidding against Wall Street funds and out-of-state buyers brandishing escalation clauses and proof of funds. Redfin and CoreLogic tracked investor purchases at nearly 30% of transactions during 2021-2022. New subdivisions near Orlando sold out before model homes were finished. Even inland cities like Lakeland posted coastal-level appreciation. Beneath the headlines, a few agents started whispering about flood zones, wind maps, and 5-figure insurance quotes. The bill for paradise was coming due. Between 2022 and 2024, 6 insurance carriers failed in Florida. Private markets retreated just as hurricane season loomed, sending shockwaves from Key West to Jacksonville. By late 2024, more than 1 in 5 households over 1 million homes stood uninsured. In Miami-Dade and Broward, average premiums soared past $7,500, triple the U.S. norm, and coverage could vanish with a single letter. The burden shifted to Citizens, the state insurer of last resort. By early 2025, it carried 1.3 million policies, nearly 1 in 8 homes statewide, pushing risk onto Florida's taxpayers and raising the specter of emergency assessments. Inland rates rose too as insurers recalibrated wind and water risk. Condo boards in Fort Myers and Naples levied 5-figure special assessments just to keep roofs covered and flood policies active. Some buildings lost coverage altogether. Deals died at the closing table when insurers refused to bind or jack deductibles to 5 figures. The dream of homeownership now hinged on a single question: who will take the risk? Mortgage math turned brutal. A 30-year fixed on a median-priced home now demands more than $2,100 a month, roughly double the payment from 3 years earlier. Rates above 7% became routine, knocking thousands out of contention with each additional percentage point. Lenders won't clear loans without proof of insurance, often at $7,500 to $11,000 per year or more. In Miami-Dade and Broward, premiums can absorb nearly 30% of a typical household's income. Contracts fall apart when underwriters pull coverage or spike deductibles at the last minute. Even cash buyers hesitate, unsure whether they'll be insurable next year. Sellers who bought at the peak are trapped cut prices, pay buyers insurance, or watch listings sit. By mid-2025, Active listings in Miami-Dade, Broward, and Palm Beach topped 41,000, up 61% in a year. The freeze spread inland to Orlando and Lakeland. Rows of empty houses, price cuts that outpaced offers, and buyers in no hurry. Pending sales fell 11% statewide in Q1 2025. In Naples, entire blocks sat with signs fading in the Sunday Cape Coral pandemic. Darling now leads the nation in negative equity. Nearly 1 in 10 homeowners there owes more than their home is worth. Mailboxes spill over, lawns go wild, shutters stay closed. Investors who once bought sight unseen are liquidating at a loss before the next storm. In many neighborhoods, listings outnumber serious buyers 5 to 1. Bidding wars feel like a different decade. Tallahassee's special session in December 2022 promised solutions but left homeowners with more questions. The governor pressed lawmakers to rescue a battered insurance market. Consumer advocates pushed for state-backed reinsurance, caps on deductibles, and mandatory wind upgrades. Industry lobbyists warned that tougher rules would drive out remaining capital. The final package landed in the middle. Public funds to subsidize reinsurance, looser liability for carriers, and stripped-down consumer protections. Amendments to force faster hurricane claim resolutions stalled. Insurers gained tools. Families saw little immediate relief. Citizens remained overloaded. Premiums stayed in 5-figure territory. The headlines looked decisive. Kitchen tables did not. Behind the numbers are families like Luis and Marbel Rivera in Orlando. Their home went under contract to a young family. But as Hurricane Ian strengthened, the buyer's insurer pulled out after a new NOAA forecast. The deal died with one phone call. The Rivera's own insurer demanded a new roof and impact windows, nearly $30,000 just to renew. Savings earmarked for downsizing vanished into repairs and legal fees from inspection disputes. Weeks turned into months of invoices and uncertainty. Across Shore Acres and Fort Myers, owners confronted a harsher reality. Rebuilding to code means elevation, hurricane glass, and higher flood standards costs that can exceed $150,000 on homes worth half that. Insurance payouts often fell short. Many sold at a loss or walked away from years of equity. County-level migration maps show what headlines missed. After each hurricane season, outbound moves spiked in the zip codes with the steepest premium jumps and storm claims. Cape Coral, Naples, and coastal Broward began to bleed residents, families, and first-time buyers unwilling to risk another year of 5-figure insurance. In the 12 months after Ian, net outflow from the riskiest coastal counties jumped, and new demand popped up in Atlanta's suburbs and the Carolinas, lifting prices 14% in places like Savannah and Charleston as ex-Floridians sought stability. Florida's modern building code was born from catastrophe. In 1992, Andrew razed South Dade, 28,000 homes destroyed, 107,000 damaged, 180,000 people displaced. Pre-Andrew construction over 400 local code regimes, weak roof connections, lax enforcement, failed spectacularly. The 2002 statewide code changed that. Homes built to it show dramatically less wind damage. Buyers today prize impact glass, reinforced roofs, and elevation certificates. But Andrew's deeper lesson is economic. One storm can erase equity, upend lives, and strain the system for years. Every hurricane season since has echoed that truth scrambles for coverage, anxiety over claims, and the rising price of safety. In August 2023, NOAA's especially active outlook triggered a panic even before landfall. Within hours, carriers issued binding moratoria that froze closings up and down the coast. Lenders wouldn't fund without coverage. Buyers withdrew offers. Sellers slashed prices overnight or tried to prepay insurance and deductibles. The pattern repeated with each forecast cone. Moratoria, cancellations, and a market reset by actuarial code and fear. Cape Coral tells the story in bold type. Active listings surged nearly 200% since early 2022. By mid-2025, over half the homes on the market had at least one price cut. The median slid from roughly $419,000 at peak to just over $343,000, a near 20% drop, erasing $75,000 in equity for typical families. About 8% of owners are underwater, the highest share in the nation. Investors are exiting at a loss, builders pivot to bare-bones affordability, and insurers keep pulling back or raising premiums beyond reason. Even cash offers have thinned as would-be landlords run the numbers on repairs, vacancies, and storms. Appraisals chase falling comps. The gap between ask and close widens. Sunshine no longer pencils out. The documented picture is blunt. In 2024, Cape Coral's median fell about 15% as listings doubled and then some. Statewide, roughly 1 in 5 owners is uninsured. Citizens holds over 1.3 million policies. The 2022 special session stabilized insurers more than households. Outbound migration is lifting prices in nearby states. The full impact of future premiums and storm seasons is still unknown, but the pattern is clear. Florida's housing market, once fueled by record migration and easy money, now revolves around risk pricing and insurance solvency. For buyers, sellers, and policymakers, the future of Florida real estate will be decided as much by deductibles, reinsurance, and NOAA updates as by mortgage rates or granite countertops.